Hello and welcome to this Wednesday's morning market briefing. We've got lots to talk about, but firstly, oil extends losses as OPEC Plus and weak US data unnerves traders, as well as that Joe Biden accuses Benjamin Netanyahu of prolonging the Gaza conflict. We've got lots to talk about on the charts also, with lots happening on the economic calendar, but we'll come to that near the end, so make sure you stay around so you can see that. Before we get straight into it, though, make sure to subscribe. The first article to talk about is to do with oil extending their losses. Now, the price of oil has now dropped further over yesterday as traders began to price in the weaker US economic data, as well as the new news that OPEC Plus members were looking to raise their production. This comes as key members of OPEC Plus have now agreed to bring back a small proportion of their current production levels, whilst 8 other members agreed to unwind such cuts. Now, obviously, this is a very relevant article considering we literally covered it, where we covered the news to do with OPEC Plus's cuts and that kind of thing just this week, so it's definitely fresh on our minds. But ultimately, we don't cover news to do with oil just as much because arguably there's less of it coming out all the time than other more relevant pieces of information that we cover, like stuff to do with the Fed and that sort of thing. But when it does come around, obviously it's very important to know oil plays a massive part into inflation, certain economies around the world, especially even the US economy, and ultimately is a very important asset which is traded around the world as well. And that's why we look at it on the charts also, because I think it's very important to kind of understand where oil's at, and there's always certain trading opportunities which does arise from such a commodity. Now, what we spoke about recently with OPEC Plus was, of course, the kind of recent talks within the OPEC cartel group about, of course, whether these voluntary cuts should be extended for oil production, which of course has been a very kind of controversial topic within the OPEC Plus group, as we know that the likes of Angola, for example, left OPEC just simply on the terms of wanting to return their oil production levels to their previous levels, because ultimately what OPEC and the rest of the members have been really trying to do is basically cut their production so that they can keep the price of oil high during this period of weak global demand, as well as kind of large supply, so excess supply, and we've got very little demand. And anyone that understands basic economics would understand that that's kind of the telltale sign for lower prices. And so what OPEC has been trying to do as a result is kind of mitigate some of those issues to do with the supply side of oil by reducing their own production. That said, certain nations within the OPEC group have in fact kind of shifted their voluntary cuts away from this policy, and in fact have now started to unwind such cuts and are now actually looking to increase production. And that's one of the reasons why, of course, Angola was quite upset with the way OPEC was conducting its kind of price policy, and as a result they left. So we know that the likes of certain members are actually raising their production, and that's kind of what we'll get into this article. But ultimately, why is this kind of article talking about OPEC Plus actually increasing production? Well, ultimately, certain members, just as I said, have actually now agreed to increase production. So we will actually see an increase in supply seemingly, whilst other members of OPEC will continue those voluntary cuts. And what that seemingly meant for oil's price is it's meant, a sell-off basically has been induced as a result of that. And as we spoke about on the charts yesterday, oil's price has now breached below that $80 a barrel level. So very significant sell-off which has followed this kind of decision and these talks, as traders are ultimately unnerved. And as we'll also get into with this article, basically kind of the recent weak US economic data, which is related to the global demand for oil, of course, has also led traders to kind of worry about the situation for oil, inducing this sell-off further. And so what it does seem like will be the case is that as OPEC does kind of raise their production once again, US economic data and data from around the world will be far more relevant and will affect the price of oil far more than it usually does or does at the moment. And that's why this is kind of an important article to read and understand because it helps contextualize that and helps kind of future-proof us from any of these kind of future releases of economic data which will affect oil's price. But yeah, long way around the kind of short answer of basically, the increased production from OPEC is seemingly unnerving traders. Now, the price of Brent crude oil fell a further 1.4% to reach the lower price level of $77.29 a barrel, in addition to the 4% drop in oil's price over Monday. And that's, of course, what we covered in yesterday's morning market briefing. The US economic data, which pushed oil's price lower, was a recent report published on Monday, which showed that the US manufacturing activity was in fact weaker than expected. So as a result, what traders have inferred from that is that the demand from the US, which is of course a massive buyer of oil, will of course be lower as that manufacturing activity is lower, so less demand basically for oil, which is why we're seeing this sell-off. Now, news from OPEC also represented a warning shot to competitors that they are not willing to sacrifice market share indefinitely, according to key bankers interviewed by the FT. The key interest of OPEC Plus members in returning to previous production levels, however, means that the market will be more sensitive to economic data, as seen with the recent weak US economic data, which has now fueled concerns that global demand for oil will remain depressed, whilst inflation will keep rates high. This understanding of the current climate for oil has led the price of it to drop 8%. OPEC Plus's recent decisions have been the result of a serious dilemma which they have recently been facing with regards to how long they can actually keep propping up global oil prices by simply curbing their own production. This is because such action has allowed new competitors to enter the market, and such competitors have of course been the likes of the US, which we've discussed many times, but ultimately really exploited this issue which OPEC Plus has really created for themselves. And so it does seem now like OPEC is trying to mitigate that and recuperate those losses by now increasing production in certain areas with certain nations. So definitely an interesting article there on a very important topic, which we always need to cover. Next article to talk about, though, is to do with Joe Biden and, of course, the Gaza conflict. Now, Biden has now said that there is every reason for people to now believe that Netanyahu is simply prolonging the Israeli war with Hamas for his own political gain. This comes as his comments, have been published in a recent interview with Time magazine, where he called for diplomatic efforts so that the war in Gaza can end. Now, of course, we've seen this kind of internal conflict arise within Benjamin Netanyahu war coalition government, and as a result of that, we've actually seen this kind of rift form between basically, Israel's strongest ally, which of course is the US, with Joe Biden kind of presenting this more humanitarian picture with the conflict and calling for a kind of ceasefire in any way possible, it does seem, whereas Netanyahu, as a result of kind of those more far-right members of his cabinet, have pushed him towards this kind of picture of focusing on the military offensives into Rafah and other areas of Gaza, rather than looking towards the kind of ceasefire solutions that may be on the table. We know that, of course, Israel did propose their own ceasefire kind of proposal to Hamas. However, Hamas, whilst they did kind of agree to such a proposal, they kind of added in their own terms, changed certain conditions, and as a result of that, Netanyahu felt the kind of situation was right for Israel to move its troops into Rafah, and as a result, a battle is now taking place within Rafah, with the likes of Biden and others within the the kind of Biden administration warning of the kind of humanitarian effects of that. Now, ultimately, why we always focusing on this is, of course, though, the potential of a regional conflict, and whenever we kind of mention this rift that, of course, is forming between Biden and Netanyahu, increases the risk of such a regional conflict, in my opinion. As ultimately what we're looking at here is, if we see the US, the kind of most important ally of Israel, moving away from Israel, then there's even more reason for Israel's geopolitical enemies to basically either kind of get involved with the Gaza conflict or invade Israel themselves. And so as a result of that, Israel is really in this tough position here, where they're having to kind of manage their own policy so that they still remain aligned with Biden's kind of perspectives and kind of what the US wants for the Middle East. So it will be interesting to see now how this kind of does develop, as there are some talks of Netanyahu kind of looking at the potential ceasefire arrangements that the US has now put forward, as that's the kind of key thing on everyone's mind at the moment, with Biden just on Friday announcing and proposing a new 3-phase Israeli plan which would help bring aid into Gaza and also help bring the war in Gaza to an end. The conditions for such a deal included a 6-week ceasefire, hostage exchange, and a set of measures which would enable the longer-term goal of a permanent ceasefire. His announcement and interview with Time magazine appealed to both Hamas and more far-right members of the Netanyahu wartime coalition government. Since such an announcement, a great deal of coordinated diplomatic activity has taken place, which has also seen the US generate a great deal of international backing. So, a very interesting kind of situation now forming within the Middle East with regards to kind of alliances and the way that the Biden administration is kind of generating this international backing to basically force Netanyahu to kind of agree to Western terms on what should now be the case for the Gaza conflict. So very important to keep your eyes on such topics, as that's greatly affecting, the likes of oil, which we of course spoke about in the first article. So, lots covered there on the articles though. But that's all to talk about on the articles. Next to talk about is, of course, the charts. Where, like always, we're beginning on the US 30, talking more broadly about US indices. Now, when we did start off this week, we mentioned how on Friday we kind of saw this bullish retracement to the upside, whereas, over the past 2 weeks, really, we've seen price push to the downside, just as a result of price meeting its, recent highs, and as a result, selling off from those levels, added to by the fact that the kind of changing US monetary policy is forcing kind of certain corporations to think about the way that they might conduct business expansion. So that is kind of why we saw that sell off over those 2 weeks. But as I said, on Friday we kind of saw this kind of bullish spike, with price increasing once again after this long fall to the downside. But starting off the week, price sold off once again. So I kind of said it was a retracement on a retracement of a retracement. And now what does seem to be forming is this kind of slow period of consolidation and ranging, with, in yesterday's morning market briefing, I was kind of talking about the fact that price had retraced on itself once again, and was now kind of just consolidating around this key area of liquidity, and then yesterday, price did just kind of rise a little further to the upside and kind of come near to these very recent highs made at the start of the week and ending last week. So what will be interesting to see is whether price can move above those levels, as then we can start talking about the next areas price could move to. But should price not kind of breach above those areas, we could definitely see price just continuing a range around this area until we receive new economic data or new news which can push the US 30 one way or the other. Those key liquidity levels, always important to note though, remain around that kind of 39,000 level, as well as the kind of 37,800 level. So keep your eyes on the US 30 as interesting things do of course develop. Next to talk about is the dollar, where interestingly price is kind of just consolidating near this double bottom. So we did note starting off the week that price was at this double bottom, and it was a question of whether price would break below that kind of key level and move to this lower level and Fibonacci extension level of minus 27.2, or in fact would price kind of bounce off that level like we see often with double bottoms or double tops, with price then maybe raising, moving to the upside and reaching those other higher levels around 105 once again. What we kind of have seen is neither, with price consolidating and just continuing to sit at that double bottom level, which has now been formed, and little has really happened from that level since. So it will be interesting to see what does happen over this week, and obviously over today we're receiving some US economic data, not loads though. I think what may be more important to what does happen for the US dollar is what happens with other nations, as we are receiving a great deal of Eurozone data, but more importantly we are receiving the Bank of Canada's interest rate decision. And I think, understanding what's going on with other central banks always affects the dollar, because that dollar is kind of the currency that leads the world. So always keep your eyes on what's going on elsewhere, and I think that decision will have the greatest effect on what the dollar does today, and whether it does break lower and make its way down to that Fibonacci extension level, or whether it stays within this kind of range that price has been in for quite some time now, since mid-May. Next to talk about though is Euro USD, which is very relevant to talk about today, because ultimately we have a lot of data relating to it coming out, but ultimately price at the moment has kind of retraced onto this area of liquidity, which I've noted out just here, as we've spoken about greatly recently, ever since this kind of retracement and price interacted with this key liquidity zone and Fibonacci retracement level, is that price is now on its way to the upside to reach this higher area of liquidity and Fibonacci extension level. Price has of course not reached that level just yet, and ending off last Friday and starting off this week, price did retrace back on that kind of bullish move that had been taking place, which was on its way to meeting that level. And so the question was, of course, when price would then find the liquidity to then continue that move higher. What does seem to be happening right now though is that move is being completed somewhat, and if I just draw out the Fibonacci retracement tool, ultimately price has not made its way down into that 50%, but is very close most certainly, and that Fibonacci retracement level does line up with that key liquidity zone, so it will be interesting to see whether price does interact with that level before then continuing higher to these key Fibonacci retracement, Fibonacci extension levels. Next to talk about though is pound yen, which made a very interesting move yesterday after selling off very significantly, falling off a cliff basically, breaking below the 38.20 Fibonacci retracement level and key liquidity zone, which we noted out as a previous area which price has somewhat interacted with, and now price has finally tapped that 61.80, which lines up with that very key liquidity zone that we noted out quite some time ago when price first broke above that key resistance level, and we noted that was a kind of key area which we were expecting price to retrace back down to. With such a large spike into the the price area, it would be very interesting to see now whether we do find that bullish momentum to move to the upside, as that's a kind of very key level which price has now interacted with. So definitely keep your eyes on that zone, as there's definitely lots of opportunity to the upside now that price has interacted with that area. Next to talk about though is Bitcoin, which is currently holding above that $70,000 a Bitcoin mark, which is of course very significant, as most recently we've kind of been looking at the Bitcoin charts and saying basically price is ranging, consolidating, not much is happening. But as I noted going into this week, we really had formed this bullish flag, which you can really kind of understand and see when you kind of draw out this extension that was first made throughout the start of May and going into mid to end May, and then throughout the end of May, price kind of ranged around and stayed within this bullish flag kind of area and staying below this trend line, but ultimately staying above this key liquidity zone. And as we noted at the start of the week, this meant that there was a great likelihood the price could break out, hook back on itself, and then continue higher. And that's really what we have now seen play out, with price breaking out over Monday, hooking back over Tuesday to interact with this key liquidity zone, and yesterday also pushing to the upside. And so now the key thing will be whether price can break above this higher area of liquidity that price first struggled with back when we were seeing this bullish momentum momentum enter the market on the 21st of May, and should price break above that, we've kind of got all-time highs to be met next. So definitely keep your eyes on Bitcoin. Next to talk about though is gold, if I can go on to that, which is now forming this kind of quadruple bottom. It seems like price can never break below this key area, and price is just remaining within this range and not moving from this range. So we're kind of waiting to see what does happen with gold. If price breaks lower, we definitely have the potential for price to make its way all the way down to this Fibonacci extension level around the minus 27.2% Fibonacci extension level area kind of thing, or of course, because price is at this key liquidity zone, we also have the potential for price to swing back to the upside. So definitely keep your eyes on gold. Lastly to talk about though is oil, which as we spoke about in the first and second article, really price is just dropped to the downside, broken below this key liquidity zone that we noted out recently, and is now really making its way to new lows, not seen of course since February, which is very crazy to say. And should price break below those levels, which price just reacted with, price won't be interacting with any levels not seen last since really January. So very key moves being made for oil at the moment as kind of geopolitical tensions kind of lower, kind of decrease, with the kind of talks of ceasefire agreements being the kind of key priority at the moment. So lack of kind of geopolitical tensions weighing on oil's price. Added to that, we're looking at global weakening demand and also increasing production. So that's why we're seeing this sell-off for oil. Keep your eyes on price nonetheless though. Lastly to talk about, as always though, is the economic calendar, as we're done with the charts, where we are receiving actually quite a bit of data, so I'll get through it quickly. Firstly, we're receiving the Aussie GDP growth rate figure, followed by the Chinese business and services figure, as well as the French industrial production figure and the Eurozone, German, Italian and Spanish services figure, as well as the British services figure, and followed by that across the bottom with the US mortgage applications figure, as well as the US employment change figure, followed by the US services figure, and to end off the day, the Bank of Canada's interest rate decision and press conference. So a very important thing to listen out for there to end off the day. That's all to talk about on the economic calendar though. We've covered lots in the articles, lots in the charts, and lots in the economic calendar. You have a great trading day, but that's all from us at Wildwood Capital. Have a great one. See you later. Bye.